first off, we have Desha Elliott. Desha is one of our stellar business advisors for ALF, and she has made a career of helping clients with strategic planning and building their brand awareness. From social media to organizational planning to human resources, Desha continues to support diverse entrepreneurs through educational opportunities, programming, and access to capital. Welcome, Desha.
Thank you. Welcome, everybody.
And next, we have LaShanda Golden. Shanda started banking as a teller in Detroit right out of high school to have a job that fit into her weekends and evenings as she was going to college. Shanda became the youngest branch manager at the bank and was recruited to Fifth Third. Since coming to Fifth Third, she's held several positions and now works as a banking business lender. Shanda uses her skills and expertise to serve low to moderate income communities and help business owners reach their dreams. Welcome, Shanda.
Good afternoon, everybody. I'm really looking forward to this discussion. Yes, I started banking so I could be home at 5, not work weekends, and none of those things seem to exist. But I'm still here, and I'm excited to talk about business products and business customers today. So thank you for having me.
Thank you, Shanda. I think that is extremely relatable. And actually, as we get started, I am going to kick it off to you, Shanda, to explore why, as business owners, should we focus on separating our business and personal finances?
Okay, thank you, Brittany. Once again, welcome everybody to all the business owners that are online, potential business owners, and everybody who is here. Please feel free to take notes if you want to. We'll be able to answer questions on the end. I don't want to move too fast, but I do want to cover as much information from the slides that we have as possible. So the first question is, why separate business and personal finances? So before I even go any further, the one thing I have to say, anytime I'm in front of 1 to 100 business owners or potential business owners is, you are your business. However, we want to differentiate you from the business. And as you have financial people that are in your sphere of influence, we are partners, be it your banker, be it your consultant, be it your CPA or accountant. We are partners with you. We take direction from you. We join hips with you to make sure that your business is functioning as good as it could possibly be. So that's why these tips are very important, to separate your business and personal finances. So the first circle here we have is easier tax preparation. When the pandemic hit, I was relatively a new business banker. I'd worked with business customers for years, but I specifically had this job carved out to work with small business owners, low to moderate income business owners, women-owned business, minority-owned business. And it was difficult for some of us to, obtain, the needed information that we needed, the finances that we needed. So easier tax prep is very important. So you'll be able to differentiate how much your business is making, how much you're making, what specifically is a loss, what is a gain, and then you'll be able to understand it better. Use automated bookkeeping. That's a very good tool, and we'll talk more about bookkeeping toward the end of the webinar. You are able to establish business credit. So many people have questions lately here about business credit. With the invention of TikTok, there's so many business-related TikToks, and people talk about business credit now more than ever. It is very important to establish your business credit, but then we also want to see what part of this credit is your own debt and what part is associated with the business. It's easier to apply for loans like government grants, like PPP, like I just said at the start. When banks and your financial partners helped people get the PPP money, it was clear that many of us didn't have our finances carved out in such a way that we can understand this is the amount of money that I earned in this business. And we needed to know that in order to give you the money for the PPP loan. We needed to know how much you were making. You want to prove you aren't a hobby business. I applaud business owners. I applaud business owners. There is so much that goes into running a business. I had a small business before, and I understand how difficult it is sometimes to manage a business. People that haven't owned a business, they'll think that, you know, running a small business, you're the boss, you're in control, you make all the decisions. But what people really find out, and I don't have to tell you guys, I'm preaching to the choir, is when you own a business, you have less time. You have, you are really responsible to the business. You're responsible to whomever your customers are. The customer does come first in many instances because that's who makes up our business. So you don't want to be presented as a hobby business. You want people to take you serious, even if this is just a portion of the income, even if this is not your main source of income. You want to be seen as a legitimate, reputable business. Because why be in business if we're not, trying to make money? Or even if you're a nonprofit, if you have a plan, to do something or, advance your community. You want to protect yourself from business liability. We want to make sure that, you are covered if something happens to your business, if your business dissolves, if your business is, sued. You want to make sure you separate yourself. And last but not least, you want to look more professional. It looks much more professional than if you were to just combine everything together. Short story, and then I'll move on. There was a company that I know, large company, they were looking for a cleaning company to manage all of their cleaning contracts. Because they didn't have a professional business email, even though they probably could manage the contracts, because they didn't have a professional business email, they weren't chosen for the contract. And I was kind of on the inside of that. But small things like that, you always want to make your business seem professional. If you have one employee, if you're your own employee, or if you have 10 employees, you still want to make sure that you come across professional. So those are just some of the reasons to separate business and personal finance.
Thank you so much, Shonda, for that. And just to carry on the topic of what happened during, the onset of the pandemic, it taught so many unprepared business owners many lessons. And so what happens when it's time to separate, or if you're not able to separate your business and personal finances, it does become harder to get a loan. It delays the amount of time that it takes to prepare taxes and profit and loss statements. So imagine having either yourself, your team, or your accountant have to work so hard to find out, what random receipts or what random spreadsheets have what information in order to consolidate it to be able to prepare those statements for you. And a lot of those government support or relief programs, the EIDL, the PPP, that required you to have your tax returns, your bank statements. And so, you want to make sure that you're able to clearly separate. And when you don't separate, it's considered commingling. And we as business owners would love to, not commingle. But then, in addition to looking at separating the business and personal, business owners should really have sufficient business and personal savings. So without those savings, it caused many hardships. And business owners experienced that disruption. It was harder for them to stay afloat during the shutdown. It also became an issue when it was time to either pivot. Maybe your business was mostly, a sit-in restaurant, and now you are having to go digital and maybe do Uber Eats. Right? Or, you have an inside location, and now that inside location has to be updated based on COVID regulations. And so without savings, business owners weren't able to prepare and make those changes as readily available. But then also, it became harder for those business owners to revamp their product delivery or staff changes. So maybe, your team now goes from, 10 and maybe it goes down to 2. And so now, you're having to kind of rearrange who does what in what order. And you want to be able to have enough savings to incorporate that in the future. Next slide.
Okay, savings best practices. Everybody hold on to your seat because this part is going to get a little rough because it is not always easy to have this much money. But this is why we are here to talk about it and to help us work toward these numbers. For the personal side, it's good to have a savings that is 3 to 6 months of expenses in your primary account for emergencies. I don't have to tell you why. You already know why. Sicknesses come, illness comes, sometimes there are job shortages, layoffs. And if you as a business owner have your personal finances in order, your business will not suffer. That's why it's key to keep these separate. If you were to go to get business financing, we ask for most banks ask for a personal financial statement depending on the size of the loan. And that's because we want to make sure you have your personal finances solid. So if something goes astray with your personal finances, you'll still have your business intact. So 3 to 6 months of expenses in your primary bank account for emergencies. Studies show that most Americans have less than $1,000 at their disposal in case of emergency. So the majority of people do not have this amount in your bank account. And this is what it says in your primary bank account. So this is something that we have to work toward because it's so important. We want to be able to support ourselves. So if something happens, our business is protected until we're able to get back on our feet. 20% of your post-tax income for retirement, debt repayment, and future expenses. Who knew a pandemic would happen? Who knew that would happen in our lifetime? So that was a great thing that affected so many finances, but people can be met with their own personal pandemic. People could get sick. They could get into a auto accident, small things that you never think about that can really, a death of a loved one or a spouse or a business partner even can affect your income. So save 20% of your after-tax income for retirement, debt repayment, and future expenses. And what I tell people on the personal side is people ask a lot, being in banking, they asked about Bitcoin and all these different gold and all these different things to invest in. And what I encourage people to do is if you do have a traditional job that offers a 401k, or if you even contribute to your own, even if you don't have a traditional job, you can contribute to your own IRA or retirement vehicle at the bank, a self-directed IRA. I tell people max that out first. I'm not saying don't, invest in the market and maybe put a little bit of money in there. But before we put a lot of money into, what's new, the shiny new penny of investment vehicles, max out what your company is paying you. If your company is giving you 3% return, you need to max that out first. Get that free money and then move on to the other ways to invest. On your business side, keep 6 months of operating expenses in the business's operating cash bank account for emergencies. That's very important. Some businesses keep a line of credit in order to do so, but a line of credit is still an extension of bank credit. So even if you have a line of credit for those needs, for those operating expenses, which is great to have, you still want to have cash on hand is better than anything else because it's truly your money. And regardless of what happens, that line of credit may not always be available, but your cash will. And save at least 10% of business profits for taxes, larger purchases, and future expenses. If you want to come to the bank to get a loan, it may take 30 days, 60 days to get a loan. You want to buy something, you see a business you want, you might need to put some money down. But if you have some of your own money, it's easier to make those moves than just relying on credit. So those are some savings best practices. I think I personally said that it stretches all of us. I think when we look at these numbers, it stretches all of us, but it gives us something to look forward to. Start with 1 month and just keep that 1 month savings, and then, let it continue to grow. Next slide, please.
So whether you are brand new to business or whether you have a current budget, these are some of the best practices that you can take into consideration to make the best choices and definitely make your budget work best for you. So having a budget helps prioritize those needs and wants. What is it that you need right now? What is it that you can wait for? And definitely helps you to understand the short term and long term of each of those needs and wants. And next helps you figure out those cash flows. So when and from where is that money coming from and in which accounts? Next, it'll look at highlighting those areas of improvement. Do you notice that you're spending too much recreationally? Do you notice that there's been a price change in maybe some of your supplies and materials? You are better able to do this once you have a budget and you can compare, what's coming in and out of those accounts. Next, it helps you project the future. So is there, something that in the future is going to come up, and you need to make sure that there's certain money in the accounts to account for it. We have federal interest rate hikes that are coming, inflation, all of that, you can better put into your budget and be able to prepare for. Next, it helps you set actionable goals and helps you make small changes over time. So imagine the difference it makes when periodically and regularly you're checking your budget and making sure that it's working for you versus running into a situation like a pandemic or any other unexpected any unexpected change in your business or anything in your personal situation, and then all of a sudden you have to rush and make very large changes at one time. Once your budget is created, you can use that to effectively pay off any past due bills and high interest debt. And I love here that it mentions high interest debt, because by paying that off first, it allows for more money that you can then transfer over to pay those with smaller interest. Next, you can use it to reward your employees and also reward yourself. You have the ability to maybe give that extra bonus. And then last but not least, it allows you to be able to invest in the next phase of your business. So are you looking to start a new product or an ancillary service? This gives you the ability to do that once you have a budget in place and you can account for it. Next slide. How to create a budget. These are pivotal steps that you can do personally and on the business side. When you're doing your personal budget, you want to take into consideration what is your monthly income post-tax, after taxes are taken out, or your net income. Then you're going to calculate what are those monthly expenses and saving goals that you have. Are you saving up for that new car, or are you setting aside at 20%, at 10% for those emergencies? And then after you calculate those expenses, you're going to compare and contrast your current income, your expenses and savings, and you'll then be able to identify your personal financial goals. And once you do that, then you are able to create that financial plan, and ultimately you'll create a balanced budget. So the goal is to be able to have a plan that allows you to have enough money to take care of all of those monthly expenses goes into your saving, and then you have enough for the personal financial goals that you set. On the business side, whether you're starting a new business or service, or whether you're wanting to take the budget that you have so that you can forecast, maybe what it's like currently in your business, you are going to look at your competitors' data on what in the market is for their current product or their current service. And you can also look at historical data as well. So imagine you want to start a new business, you want to start a bakery. Look and see, those that are in the area, how much are they selling theirs for? And you can compare your price against theirs. And if you're in business now, you can also look over the past few quarters to estimate potentially what your earnings will be going forward. Next, you'll want to identify those fixed or those indirect costs. So these are the costs that whether or not you make a sale, your business still has to pay it. So, those office leases, any loans, paying employees, those salaries, those are set and fixed costs. But then you'll want to look at those variable costs or those direct costs. And these mostly impact how your product or service is sold. Once you do that, then you're going to compare your earnings, the costs, and any saving goals that you have. And from there, you'll be able to identify the business financial goals and then create that financial plan. And again, the goal is to make it to where your business ultimately is paying for everything that it's supposed to, and it has money left over for savings and for any other business goals. Next slide.
Okay, I'm sorry about that. I was on mute. Okay, sticking to your budget. Once again, for some reason, I got the tough slides that I have to talk about the tough conversations. Sticking to your budget, it is never really easy to stick to your budget unless you're a very focused person, but it's very important to stick to your budget. And we rarely talk about budgets in business, right? But it's so important to stick to our budget when we talk about business and personal and putting those two together. It's a very important strategy to use, because it is easy to throw yourself off of budget. Like I said, I've owned small businesses, in the course of my time, and I work with businesses. Sometimes we can create a budget and then things will throw it all off of whack. But you just have to be consistent, and you have to chip away with it, at it, and you have to maintain as much level of even consistency as possible. So number one, revisit it. Budgets change. The cost. We look at the cost of food, for instance. The cost of food has gone up. If you're a restaurant, you might have been paying a certain dollar amount of tomatoes. Then the tomato shortage happens, and then the cost of tomatoes is through the roof. So maybe you have to limit the cost of something else. You have to revisit it regularly. You have to keep yourself accountable. You are your business. You have to hold yourself accountable. You have to have a certain level of stick-to-itiveness, so you will make sure that you are where you need to be. Set realistic numbers. When you create a business plan, for example, most businesses will have a business plan. And even if you're an existing business and you go for funding, if you're looking for an SBA loan, say, you'll still need to have a business plan. And we ask people for projections. So we look at this number. We look at this term realistic. It's very important to set realistic numbers. We can look at what we want to do, but the truth is we have to look at where we are today. And those realistic numbers, that's what we as financial professionals want to see, to make sure you're aware of, the challenges that are in the market today. Keep your bookkeeping up to date. It is so important when we look at your finances, even if you're using, a QuickBooks, or even if you're using an accountant or a CPA to put together your financing, you have to be able to speak to what your funds were used for. I'm also on a board where I am, the treasurer. They always want to make the banker the treasurer, right? So as part of my job on this board, it's to do some, basic accounting. And you have to kind of explain if something, was charged, or if there's a large withdrawal. We want to know what it's for, but you need to be up to date with that, because if your bank records show one thing, but then it's not accounted for properly on accounting, it's difficult to explain it. Consult your team or your family when building. When building your budget, talk to somebody else to make sure there are no, surprises. There are no upcoming large costs that are a part of the budget that you're not putting, into place. Sometimes you are the owner, you are the CEO, but then, you might have a partner, or you might have a financial partner even that works for you, or you might have a director of accounting that might have to tell you, hey, we've got a large lump sum of taxes coming out, or we have a large fee, or we have to put some money down, or a loan that hadn't needs to be repaid. Now the payment is coming back. So make sure that you consult everybody. Create a culture of accountability. So that's checks and balances all around, not just for others, but for ourselves as well. And at the end of the day, you have to remain flexible. It's so important to remain flexible because things change, things shift. One of my favorite words that I use that came out of the pandemic was pivot. If you weren't able to pivot and use your business effectively, you may have gotten lost in the dust. Some businesses that were no longer able to be, customer facing, needed to look at opportunities to go online, to utilize electronic methods and means to grab customers or to capture funds. So you have to make sure you may remain flexible. Next slide is income and expense tracking. Why do we track it? We've always said, in banking and personal, I say that if it's not written down, it didn't happen. Just like when you working out on social media, if you went to the gym and you did not take a picture, it didn't happen. So look at the same thing in terms of finances. If we didn't track it, it didn't happen. And I'm just gonna say this from a lender perspective. I had customers that we've done loans for, customers seeking a loan, and they give us their financials. And then as we dig into the financials, depends on the size of the loan, we'll see so many gaps. We might see gaps and say, well, what is this for? And what is that for? We want to be able to talk about these things from the beginning. We want the customer, even if you have to go back to your financial professional and get it explained, that's fine. But we want customers to be aware of the financial changes that happen in your business up front. If we ask you a question about, say, a $20,000 debit or a difference in accounting of $50,000, we don't want you to say, you know what, that's a good question. I have no idea. We want you to be aware of the things that are happening in your business. So it's important to track it. Number one, it frees up time and reduces stress. It's so stressful. Even if you look at your own personal finances, you will, have a budget for something, and then you look up, has this ever happened to you? And you're like, where did my money go? Like, I had this amount of money prepared to do this. Where did all my money go? Then you start, double adding, carrying the one. And if we don't track in advance, I have 20-year-old twins. So they're new to the finance world. They have full-time jobs and they just use those debit cards. And then they're like, hey, how don't I have, money for what I need? That's because you've been swiping. You've been swiping without writing it down. So it's very important. Customers pay you quicker. Vendors are paid on time. We want to make sure that is your business credit right there. If you have a vendor and you don't pay them on time, they may not help you anymore. I had a business who bought a clothing store. He was the manager of the clothing store for years, but he was not the owner. So when the owner sold him the store, he didn't get that same ability to get clothes. It was a men's clothing, a suit store. He didn't get that same ability to get all these suits he wanted to on credit. He needed to work to earn the right to get X amount of suits without paying for them, because he was still new. He was considered a new business because now we have a new owner. So it's important to pay your vendors on time. Easier financial reporting simplifies payroll and taxes. We want to simplify payroll and taxes because we don't want to owe the government any extra money. We already have to pay enough money for taxes. We're not like some people who don't have any taxes at all to pay, even though they have billion-dollar businesses. But we have to be able to tell, the government, this is how much I pay my employees, and then this is how much in taxes we pay. Because if not, you can have so many fines and penalties from not paying your taxes or making these payroll adjustments timely. So I always encourage people, if you have time, you have the ability and time, do your payroll. If you don't, hire somebody. It is not that expensive, but it's worth it, because if you get one penalty, that could have paid for a whole year of proper accounting. Inform strategic decisions. We want to make strategic decisions. We want to be wise business owners, and it attracts lenders and investors. We love people with clean books. Even if you have a lot of debts, it's okay. If you have a lot of debts and you know how to manage them. Debt is not always a bad thing. Debt is not, I know that's a curse word for some people, for me to say. Some people just hate debt. I understand that, but debt is not always a bad thing. The question is, are we managing our debt properly? Then how to track receipts, pay stubs, invoices. Now, don't walk around like the business owner with a shoebox full of receipts flying around everywhere. There's so many more ways that we can track without carrying our shoebox of receipts to our CPA or our accountant. They don't want to see that, but that it is very important to keep receipts. But you can do that. All of this is now done electronically. Man, when I look back at what we do with business today and what we did years ago, it's so much easier. Even if you're a novice, even if you're not familiar with how to properly, account for your business, there's so many ways to do it. Whatever your business is, if you are a sign maker, if you're a baker, you know that, baking, signs, clothes, and you might know finances, but there's always somebody who's able to be on your team to help you manage the financial piece so you can get back to doing what you do best. Bank statements, make sure you keep your bank statements, general ledgers, P&L, your profit and loss statements, AKA income statements, balance sheet. Usually it's great to see those annually, but it's good for you to look at it on a quarterly basis. And in addition, if you have software that you're using, it can actually track it for you. So you can compare year over year. Last year, this is how much I spent in payroll taxes. Last year, this is how much I spent in rent. Last year, this is how much I spent on inventory. And this year, this is what I'm doing. And I'm on track to make X amount at the end of the year. Cash flow statements. We want to see where your money is going to. Balance sheets. And last, basic bookkeeping software. Like I said, it's a good idea to invest. Some of you guys are, numbers heads. You don't need to, invest in software. You're able to do it yourself. But for those of us, and I say us because I'm a banker, but I love the calculator and Excel spreadsheets are my friend. So you might need that basic bookkeeping software because it makes it easier for us.
Yes, and truth be told, as a business owner and a former tax preparer, I have seen my fair share of shoe boxes with receipts. It does happen, but again, this presentation, we're going to talk about some of those really awesome bookkeeping methods and what will work according to, your preferences, your experiences with numbers, your time, or even the size of transactions that you're dealing with. So you have good old pen and paper, your paper ledger. So of course this is free, and free is often inexpensive, but as the mention with the twins and the debit account, they're not taking the time to do it. It does take time to go back over the paper ledger and manually put in, okay, I received this much money, I'm debiting this much, I spent this much on these shoes, this business expense, whatever and whatnot. And so in addition to it being time consuming, you run into the possibility that either those papers get lost or they get damaged. And so now, how is it that you're going to properly have the most accurate data? Next, you go into Excel or Google Sheets. So transparency, I didn't start out being a fan of Excel sheets, but the more that I started to learn business and the ability to use that, especially when accounting or keeping databases, Excel became my friend. And so Google Sheets, it's free and it comes with any Google Mail account. Excel, it is a part of Microsoft Office, and you usually pay for it within a package. The advantage of using your Excel or Google Sheet is that, again, it's relatively inexpensive, semi-automated to the point that, once you put certain formulas in certain tabs and certain boxes, it will do the calculations for you. So you don't have to worry about, did you miss a number if you forgot to carry the one? But then you have to look at, again, it is time consuming because you're having to go back in and manually put on that spreadsheet what needs to be there. And then once you set a particular page to what it's supposed to be, it becomes difficult to change it. So, earlier we mentioned you might have to present a profit and loss statement, or you might have to present your cash flow statement. Well, if you didn't already have that sheet set inside of Excel or Google, then you're going to have to recreate it and transfer those numbers into those cells. But then, you get more into the do-it-yourself or the DIY space, and you have programs like Mint, Wave, FreshBooks, Zero, and these allow you, free time, limited, or up to $15 a month to be able to inexpensively automate what is coming in and out of your bank account. And so that, again, you're allowing for there to be a consistency digitally of the accounting of your revenues and expenses. But the disadvantages to these, again, they're for the DIYers. So there's limited support if you get stuck with kind of understanding what goes where, or if you have a question about how a certain expense should be calculated, it becomes difficult to kind of scale up from the services that these DIY software has. And then because these software is mostly, for a certain type of business owner in terms of where they are in the stage of their business, the technology lacks some advanced features that maybe you'll need to have for, different type of financial goals. Next, we look at QuickBooks. And so QuickBooks, it will run you anywhere between $175 to $400 annually. And it's great at automation. It helps streamline data and entry. It can help track and create invoices. I've used this plenty of times to send out, an invoice to that vendor or, whatever project. It does have the ability to do complex financial reports. And then, they have a kind of chat system to where you can log on and speak to the QuickBooks advisors to help you go through certain things. But, they will also kind of anticipate that a lot about what you're doing. So again, this is a little bit more advanced than maybe your FreshBooks, but it still works nonetheless. Disadvantage is that there is a higher price point, and you still have to be comfortable enough with the technology to overcome any learning curves. I know QuickBooks for me, I've been able to use it in conjunction with, maybe the miles that are put on a car or a vehicle, tracking the gas. So it worked out really well for that. It just, gets a little bit complicated when, maybe you have multiple businesses and accounts, and now you have to, pay a little bit more for the extra service. So there's that. And last but not least, you can get a really amazing bookkeeper. On average, you're looking at $350 per month. And this gives you more of that face-to-face group dynamic of professional help. They can help you with that complex financial reporting tracking. It's way less work for the business owners. And oftentimes, I speak with different things, and they talk about how it's usually really awesome to speak with the business owner and their bookkeeper at the same time if they run into situations when the business owner is looking at getting a loan, because oftentimes the business owner may or may not be financially savvy, or even very focused on the financial portion. And so that bookkeeper is kind of that bridgeway and translator for what needs to be accounted for, and whatever the bank has the questions about. But the disadvantage to that is that once you take your accounting kind of out of the internal business realm that you have, and you give it to a bookkeeper, now it's less business owner control and oversight. And then of course you're looking at having a higher price point. So again, these are the primary bookkeeping methods, and you all can kind of look at these and see what works best for you, your team, and really take into consideration that your time as a business owner is very valuable. So if you know that maybe numbers gives you an extra set of headaches, or that 6 hours that it may take you to compile everything, you really need to use that to do something else, I definitely say do not be afraid to delegate. Next slide.
All right, thank you so much, Desha and Shanda. Just pausing here for some resources. These will all be emailed out as well tomorrow, but this is the time, now that you've heard both of our expert panelists kind of talk about the importance of doing this and how you can do this, please drop your questions in the chat for an opportunity to hear directly from them. And we do have a couple of questions already, so let's go ahead and start with these. So Desha, I would love to hear from you on what factor does separating your business and personal finances play when you're applying for grants or loans?
They play a huge role, Brittany. I'll use this story for instance. There's a particular dessert company that they knew that they needed, I'd say at least $50,000 to kind of deliver on this purchase order. And they didn't really have their other businesses and their other personal information separated. And so they needed to be able, to get their loan money within 3 weeks. But because they had to separate out everything, it literally took them 2 months, to be able to get the funding that they were looking for. So again, it goes back to, you want to make sure that you're always keeping your business and personal separate. And then something else to consider as well is you'll also have an understanding of, what you're eligible for because of, what is in your business taxes, as well as maybe what you're a personal guarantor for.
That's great. Thank you so much, Desha. It's great to hear just, how important that is, especially when you as an entrepreneur are trying to access different kinds of capital. And Shanda, this one I'll shoot over to you. So what is the first step that someone can take in separating their business and personal finances, especially if they're all kind of jumbled together? Where can they start?
Okay, well, where they can start, the first thing I would do is look at your accounting method. Like, do you have a bank account? That's a good start. If you are using your one account for everything, the number one thing we need to do is separate it by bank account. So make sure you get a business bank account. I'll put my personal information in chat. So if somebody wants to email me directly, I can give you some information. Of course, there are banks everywhere that can open up a business account. Some people are not even in the Fifth Third market. So I'm speaking for bankers all over the world. But however, Fifth Third is here today. If you are interested, in some information on getting a business bank account, I can help you with that. But that's the number one thing. You want to make sure that your finances are separate, using your account. Number two, another thing that does is your card. So you can we use a personal debit card, most of us do. And then for business expenses, you can have a business debit card. So if you were to get gas or you were to make purchases or buy things online, you can do it with a business card using one and then a personal for the other. Also, the last thing I want to add is make sure that you have a business that is registered. So that means you are either a LLC or a corporation or even a DBA, your sole proprietorship, but you want to make sure that your business is registered. You can say, well, I've been in business 10 years, but the government doesn't recognize your business as a business unless you truly register it. And that's what we need to do first, before we even get to the accounting part, to make sure that your business is registered. And then some people might say, hey, I have a soap business, I'm making soap, but then I also make cookies. So you might want to separate your businesses by what you do. Or you might have a nonprofit arm and say, so much of my business I spend giving back to kids that's in need. So you might need to break that business out, but it's very important to do so, starting with your finances, looking at your accounts and how you're spending money every day.
That's such a great point, especially since I feel like entrepreneurs have that entrepreneurial spirit where they will start a lot of different businesses or incorporate a lot of different ideas. So it's good to know where they can start off immediately. And I did get a question in the chat that was specifically, what kind of resources does Fifth Third Bank offer to its customers regarding business and personal finances?
So some of the products that we have some things for personal finances where we can help you track your credit. So if you don't have a resource to look at your credit, to make sure, that your credit scores are increasing. So make sure that there's no fraud. There's things like that. We obviously have business bank accounts. We have personal accounts. We have what's called a momentum account on the personal side. If you live in a Fifth Third market, that account came out in 2021. You may have seen trucks driving around. We even hired trucks to drive around and advertise these momentum accounts. So whereas you get paid on a Friday by direct deposit, the money comes to you 2 days early. So you'll get the money on Wednesdays. So there are a lot of different things to meet the needs of what people want. And then for me personally, as a small business lender, I also work with micro lenders. So if you are a new business and you may not be, ready to get a traditional loan, you may have only been in business for 6 months to a year, or maybe even just starting out, we may be able to help you secure alternative financing by way of micro lending. And what micro lenders are is a group of usually nonprofits that are in a specific community, and then they help small businesses in that market, usually low to moderate income, or some of them are women-based. There's a large women-based nonprofit here in Michigan, and they're micro lenders. So if somebody's looking to get started, even if they don't have perfect credit, if they have a business plan and they've got, some solid things in place to get their business started, they may be able to help them, buy an oven or, secure some financing, smaller financing, to get their business going. So, the main thing I can say is, your bank is one of your financial partners. And I tell people that your banker, I ask people who's your banker. That's usually the first question when I meet with a client. It's not necessarily the teller at the window. You need to have a relationship where if you needed to get something from the bank or needed some assistance, you'll be able to have a specific banker. So I'm sorry, my answers just go so long, but I just got to answer the whole question, full circle. So yes, there are things, and our information will be provided to you. So if you wanted to reach out to me electronically for Fifth Third specific things, I'll be more than happy to assist you.
Wonderful. Thank you,
Shonda.
Shonda. And I like being able, there's so much to talk about. So I think it makes sense to kind of bring the questions full circle. Desha, I'll shoot this one to you. What, in your opinion, is the best way to navigate paying an owner's salary? We have someone who says that she struggles with not paying herself at all so that she can accumulate the necessary savings and other things she needs as a business owner, but it is having an impact on her personal finances. So what's the best way to navigate that, in your opinion?
That's a wonderful question, Brittany. This is where a budget, this is where coaching, this is where, that relationship with the Shondas of the world, this is where all of that matters. As a business owner, you are an employee. And so where in the budget of the revenue did you account for how much to take out for yourself? One of the questions that are in the chat as well, can I directly transfer money from my business account to my personal checking account? Sure, you can list that as how you pay yourself as an employee. And so oftentimes business owners, they'll get the revenue from the customer, get the revenue from the product, and they're just using that and taking it and going strictly into, putting that towards the next sale or the next purchase without really analyzing where is this revenue supposed to go once it's received. So, if it's just as simple as, okay, for every $100, 20% of it goes towards salary, another 20% goes towards expenses, another 10%, as Shonda mentioned earlier, goes towards the savings, okay, and the other percentage goes into the actual business operations. Those are some of the just a nice tips on how to account not only for your salary, for other salaries, and then of course how to scale up the business overall.
Awesome. Thank you for that. And I think that's such a great way to kind of wrap up this section and the questions that we've had. I have seen some other questions in there that are really specific to your business. And I just want to let you know that the support doesn't stop here. Not only is there going to be a follow-up email tomorrow that will include the resources, like Shonda mentioned, her information. We also have free coaching sessions that you'll see a link for in the chat. So that way you can have some time with someone who can really walk you through your specific business. So I just want to thank everyone so much for joining us today. And we really hope that this webinar will help you as you move towards hitting and succeeding in your business goals.